Building an equity story. For you as an entrepreneur, but also for a VC, for everyone being involved in entrepreneurship, it's important to add value to companies. So what you like to do is you build an equity story, because the equity story basically reflects the value you've built. And this is what comes after the investment. So we talked extensively about that process over here, the pre-investment phase. Now the VC invests, the money flows in, so to say. What's happening then? Well, the work starts, and it's more important than that stage before, because now adding value starts. The VC gets involved. He thinks about follow-up financing. Maybe there's some more financing necessary. In most cases, it is necessary. And by the way, the VC wants to exit. Maybe you want to exit too. So you have to think about exit routes. You have to build the exit route. And you have to build the equity story in order to realize that exit. And this is not only your perspective as the entrepreneurs, especially also the VC's perspective. First of all, talking about financing rounds. It is probably your first financing round with the VC. It might be a second financing round with the VC, but you're not there yet. And there are many companies who need more than one round. Actually, if you look in history, there were many companies who did more than one round. And it makes sense, because if you can reduce the perceived risk, money is getting cheaper over time. So this is why you do financing rounds. So that's the first thing the VC always has in mind, that there has to be some more financing. Maybe he does some part of the financing, maybe a new investor comes in. But most importantly, again, for the VC is to create value. Because he wants to put in 2 million, he wants this to be 4 million next year with 100% interest rate he calculates, or whatever interest rate. But this is the first thing he thinks about. And it's fair to do that, again, from a VC's perspective, and it's also good for you as the entrepreneur. So building an equity story, if you look at the WhatsApp example again, you can see how it worked, and we already talked about that initially. So they had a seed round of $250,000, which was a comparably low valuation. And this is the equity story they built. We are not sure about the valuations in all the Series A, B, C financing, but we knew that 7 million was flowing in, then 50 million was flowing in. By the way, we know that valuation, which is 1.5 billion, so a pretty high valuation. If you look at the seed round, it's for sure a great equity story, and it even got better because there was then that 19 billion exit to Facebook. And this is an equity story. It's probably not the typical equity story, because not every company can do a 19 billion exit. That would be nice, but it's not happening. But that's what we are talking about. That's what we mean if we say equity story. And by the way, equity story is very important also if you deal with the VC, because that's his way of thinking, adding value in order to build that equity story. It also might make sense, I'm not saying always, but it might make sense to think about a lower valuation at the very beginning, because then you can build a more interesting equity story. So also think about valuation in that way. Adds a point to valuation. So again, this is what VCs do. They need their business model, so they think about realizing the business model, and this is about equity story. So the best way to deal with that, it is your story, your equity story. You add the value, and you want the same thing. However, the VC does something, and this is what VC investors will do, and this is their involvement. First of all, they get involved on strategic decision-making level. So they would like to sit on the board, and the board normally has to decide on strategic decisions. So They do strategic decision making. Sometimes they also help you on an operational level, not always, but sometimes. And depending on VC's focus and expertise, they can add more value, especially also contacts they have for subsequent financing rounds. This is sometimes really, really interesting. Now, they hopefully add value. As I said, that's the second point. And I already mentioned the context, through their networking and context to potential whatever, not only potential investors in subsequent rounds, but maybe also partners, customers, suppliers. Maybe they have someone in their portfolio that can use your service and so on. But maybe they also have industry, market, whatever, financial expertise. I mean, that's an issue people discuss. Do VCs really add value? You remember Vinod Khosla is probably an extreme standpoint saying 80% of the VCs add negative value. Others say they really add value and they're great investors in the Valley, and everybody knows they are great investors in the Valley, and they already have added value. We mentioned Michael Moritz, who was on the board of Google, and he added value on the board of Google, that's for sure. And last thing, what they do is they think in those financing rounds. And the least thing they want is that the company goes bankrupt. So they want to help the entrepreneurs to get more financing. They use their contacts into the scene. They use their financial expertise. And now they're sitting in your boat to discuss the term sheet with a new VC, which can be a very favorable situation. It also can be difficult. I mean, the VC normally has money. Normally, he likes to participate in the next round. So he might not have the highest expensive to push your valuation up because he can buy additional shares quite cheap. So in order to build that equity story afterwards when he bought the shares. So careful with that point.